A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We are going to get the lowdown now on regional bank ETFs with our ETF research director, Nina Mishra, who joins me here. You're going to tell us why all of the popularity in these regional bank ETFs. Investors kind of gearing up maybe for higher interest rates?
Exactly. The jobs report last Friday was much stronger than expected, and it has greatly increased the chances of a rate hike by the Fed in December, unless, of course, the November's job report is a total disaster,
right,
or there is another round of panic in China or other emerging markets. The Fed funds futures now show a 70% probability of a rate hike by the Fed at its December meeting. And I think the investors have started positioning themselves for the rising rate scenario. Particularly on Friday, after the report, we saw that while the broader market was more or less flat, investors were pulling money out of rate-sensitive sectors like utilities and putting money into sectors and industries that benefit from rising rates like banks.
So kind of a rotation.
Yeah, exactly. We saw the beginning of that rotation. And you know, banks benefit from higher rates.
Sure.
Because
Make more money.
Yeah, because if you're expecting an increase in your deposit rates, then sorry. Yeah, it may not be much, if anything at all, and not anytime soon. But banks will almost immediately raise the rates that they charge on loans.
Sure.
Now we're talking about regional banks here because they have been outperforming the broader financial sector this year, and I expect that trend to continue. They are well capitalized now, and loan growth is picking up. Bigger banks, they have a lot of regulatory costs, and while higher capital norms, they reduce risk, they also reduce profitability.
Sure.
These smaller regional banks, they have simpler business model, and they are well poised to benefit from rising rates and recovering domestic economy.
And so you've got something that illustrates this here.
Yes, we talked about that rotation, and this is a 5-day chart which shows the performance of regional bank ETFs versus the broader market, represented by SPY and utilities ETFs. So we saw that regional banks have started outperforming the broader market and the rate-sensitive sectors like utilities.
And you think this can only continue?
I think this can only continue.
All right, so you have a couple of examples here of these regional bank ETFs. The Spider S&P regional bank ETF, KRE the ticker.
Yes, this is the most popular fund in this space with almost $2.6 billion in assets under management. It holds 90 regional banks and almost equal weightings. It's a Zacks rank number 2 buy-rated ETF. Expense ratio is 35 basis points, which is pretty reasonable. It's up 13.5% this year.
And then there's the PowerShares KBW regional banking portfolio.
Yes, this is slightly more concentrated. It holds 50 regional banks and thrifts. Expense ratio is the same, 35 basis points. This is also a Zacks rank 2 buy-rated ETF. It is up 14.3% this year, slightly outperforming the earlier one.
All right, do you own either one?
I don't.
All right, check out other information on ETFs in the ETF section of Zacks.com. So if you're not there already watching this video, all you need to do is go over to the home page and use the Funds tab in the top toolbar to get to the ETF section of our website. Another reminder, if you're watching our videos on the YouTube platform, don't forget there you can subscribe to them and comment on them, and the feedback's always welcome. With Nina, I'm Terry Ruffalo.